All right, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to touch on a couple of things and largely sort of do a psychological preparation for the next few weeks and potentially the few weeks after that. So I want to just start by saying, first of all, remember we've had the US downgraded to AA. That was the news, the big news of this week so far. To put this in context, you can see all of these places on the left of the screen right here are AAA rated, apart from the US, which has been downgraded by S&P and Fitch. Moody's still has them at AAA. If I hop into an S&P 500 chart, which I've got right here, and go back to August in 2011, last time we saw the US downgraded from a AAA to a AA+ was right in this neighborhood. Let me just grab my pen. Right in this neighborhood here. This is where we saw it happen last time. And you can see that whilst the market declined into that downgrade, whilst we got some chop and volatility around the time of the downgrade, remember this is the one and only time it's ever happened before, you can see that shortly thereafter, the market did pretty nice things going forward. So whilst I kind of expect to see a decline, whilst we've been calling on this channel for a decline into the weekly cycle low, like Bob Lucas here has been indicating, whilst this has been expected for the past few weeks, and I think it's safe to say that we have likely entered the declining portion now. We have likely got a weekly cycle top in play, which tells us to be open for 2 to 4 weeks of decline before we can find our cycle lows and look to resume an uptrend. I don't think this is immediate cause for concern. I don't think this is justification for calling for some imminent end to the bull market and a huge 2008 style plunge. I really don't think we're at that point of the cycle just yet. So I wanted to pull up this melt up chart and talk a little bit about psychology. People have been asking me to talk a bit more about psychology, so hopefully some of this will be well received. But also I think it's really important to understand how markets work, okay? You're going to see, in fact, let me back up a little bit. So when we were in this neighborhood back here, we were in around summer of last year, I was saying that people were way too bearish. There was way too many people posting 2008 style fractals, both from this sort of neighborhood here, which would indicate we did something like this, and from this low in October that we made, we were seeing 2008 style fractals be posted down here. And one of the things that gave me so much confidence in proposing this expectation, this idea that we were going to form an inverse head and shoulders, break out this downward sloping bear market purple resistance line, and then melt up to new all-time highs, was the fact that every man and his dog was so bearish. The 2008 fractal was absolutely all over Twitter. It was everywhere you looked. People were saying, that's it. Look how similar it's been on the way down, and we're going to see a 2008 style plunge. This is the end. But like I kept saying at the time, I just didn't think it was that kind of scenario. And if you compared what was under the hood around these lows in July or June and October, it looked nothing similar to what was underneath the hood and what was going on fundamentally during 2008, which was another reason I said we could probably recover out of here. And I thought the thing that would trap the most amount of people would be this big blow off top move to all-time highs, a rally that happened really fast. I was saying very consistently every time I updated and talked about this chart that if this was to unfold, it would be the least understood rally of all time. It'd be the most hated, the saltiest, the most doubted, the most shorted rally the world has ever seen, because it didn't make any sense. It really didn't make sense. There was a million reasons to be bearish the whole way up, and yet the market continued to just press on and make higher highs and higher lows. There was times when this call looked absolutely genius, and there were also times when it looked absurd. For example, when we broke out here and we rallied up, it really looked like, okay, great, we've got a good shot of breaking out here. But then shortly after, we reversed. And when we got down here, I had a lot of people name calling and saying I was insane and saying, haha, told you so, only for the market to reverse and move higher. And we did really well on this channel at capturing the breakout from here to here, ducking out, getting back in again. We did this with the NASDAQ and the Dow as well. And we rode the vast majority of this trend and have done well to capture the bulk of it, which is your job as a trader. Your job as a trader is not to capture 100% of the move. It's to find a high probability setup, get in, take something from the market, and then get out without giving that back and ending up with losses. So psychology played a very big part in being able to predict this. I don't like to use the term prediction, because prediction implies I think I know what's going to happen in the future. And something I say often and all the time on this channel is the only thing I know is that I don't know. And if you can have that attitude in trading, then I think you stand a good chance. So it's important for me, not to say I know what's going to happen in the future. This was never a prediction. It was only ever an expectation. But something that enabled me to make this call, to have this expectation, was that down here, everyone was bearish. There are plenty of accounts on Twitter, I'm not trying to single anyone out, that have been doom posting things like this the entire way up. Okay, the entire way up, people have been saying, no, it's going to roll over. Oh, this is just a bear market rally. There were people calling this a bear market rally when we were all the way up in this neighborhood. When we first made this high, people were saying, and we had this tiny little pullback, people were saying it's a bear market rally. And what comes next is a 2008 style plunge. Oh, where's my pen? From here, right? This is, people have been doubting and shorting and hating on this rally the entire way up. And a simple trend line technique, something like this, would have been more than sufficient to keep you in the trade. And all the while we're above this, there's really still no technical reason to exit this market. But as I've been talking about for weeks now, and as I will likely continue to talk about over the next few weeks, it's time to have this weekly cycle low flush. Now, the main reason we need to have this, and the primary function of a weekly cycle decline, is that it serves to reset and flush sentiment. Just a couple of weeks ago, even last week, sentiment was extremely bullish. And remember, when we were down in this neighborhood, sentiment was extremely bearish, and markets always move to harm the most amount of participants. So in this neighborhood, when everyone's bearish, you can be quite confident that taking the opposite side is probably better than being involved with the herd. And similarly, people that were exuberant and super bullish here are likely being set up to be slaughtered. And so again, I want to talk about the psychology. Like I said, super bearish down here, super bullish up here. And now, as we start to have a decline, on big news, such as the US being downgraded for the second time in history, there's going to be plenty of doom posters again. There's going to be plenty of people saying, yeah, look, the yield curve is inverted and it's worse than ever before. But remember, there's nuances to this. Yield curve inversions do typically predict recessions, or at least they lead recessions. But remember, the yield curve can stay inverted for a long, long time. And it's not until we get the reversal and a cross back above the zero line. That cross back above the zero line is usually what triggers the recession. So again, if I hop into my melt up chart, I have been expecting we would get this move to all-time highs, followed by a massive deflationary bust. I've had these notes jotted down here to say that we're probably going to get this horrible set of conditions emerge, which culminate in the launch of CBDCs and some kind of reset. But I don't like to spend too much time focusing on the future because nobody really knows. This would make sense to me, given my experience in the market. This would make sense that we would see this sort of thing unfold because that's historically what always happens. Whenever we get a big crash, the Fed has to step in and print more money to prop things back up. It typically has to cut interest rates back down to near zero. That's just how the tools of the Fed work, isn't it? But as we are now probably in this weekly cycle decline, as we have now probably entered into a multi-week decline period that, remember, serves to flush sentiment, I thought it'd be a good time to talk about what I think psychologically lies ahead. Now, as we roll over, you're probably going to see a whole heap of doom posters. You're probably going to see a whole heap of people come out and say, that was it. It was a bear market rally. It was the biggest bull trap of all time. But once we find that weekly cycle low, we should expect a minimum of 4 to 6 weeks of upside in the worst case scenario. In the worst case scenario, we should get at least a 4 to 6 week counter trend bounce that, assuming it is the worst case scenario, then rolls over and has this 2008 style plunge. So it's still not time to be shorting stocks here. It's still not time to be calling for the end of the world or a massive deflationary bust yet, because once we come out of that cycle low and proceed up for 4 to 6 weeks, there's still no telling that we won't continue to do something like this. And as I showed you back in 2011, the last time this US was downgraded, the last time this set of circumstances unfolded, as you can see, really good things happened to the stock market for a number of years going forward. Now, I don't really think this is what we're going to see, but I do think we're likely going to see some kind of resolution technically that then follows through to higher S&P 500 prices. And I do think we have a good chance at cracking the all-time high for all three of the major US indexes. So I guess my point here is, one, be open to seeing this pullback. Okay, we know this pullback has been coming, and if you've been watching the channel over the last few weeks, I've been talking about being overstretched and overdue a correction since this neighborhood right here. I've been saying that, we'll keep pushing the longs because there's no reason to exit yet, but that reason is about to show up, in my opinion. I think we've got there now. And as this decline, as this weekly cycle low unfolds, as we get this decline into the weekly cycle low, you're naturally going to get people come out and tell you that was the end, that was the biggest bull trap of all time. So I think it's important to understand that we first have to see the weekly cycle low form and a swing. Once we get the swing, then in this neighborhood here, we can make the decision. We can look for the market to tell us, is this just a counter trend bounce that is going to resolve much lower? Or is this what I think it is, which is a counter trend bounce that will then continue to follow through until we make new all-time highs? Then the question, of course, becomes, do we roll over and break down immediately, or do we do what we did in 2011, where we can expect many, many years of upside? So that's point number one. Be open to seeing a lot of doom posting over the next couple of weeks, but also be open to understanding the contextual awareness, the situational awareness of this weekly cycle, and that we should get a counter trend bounce spanning at least 4 to 6 weeks out of that cycle low. The next thing I want to warn about is, like I said, when we were down here, everyone was calling for 2008. When we were down here, everyone was calling for bull trap 2008. This has been the most shorted, most doubted, most hated rally all the way up. And you better believe that all of those people that were basically wrong since the lows, now we're getting this weekly cycle flush, are going to be coming back out and telling you they were right all along. And of course, 2008 comes next. Like I said, once we get out of this weekly cycle low, expect all of those people, all of those 2008 people, doom posters, bull trap posters, all of these people will quickly become the double top gang. If we can indeed do what I think we're going to do and rally up to new all-time highs, it's natural to expect some kind of reaction at the all-time high level. Markets typically don't just slice straight through all-time high resistance like butter. So some kind of reaction at all-time highs, some kind of chop before we can break the all-time high would be perfectly reasonable to expect. So my second piece of psychological advice here, or a psychological preparedness that I personally am preparing to see, and that I think everyone should be prepared to see, is if we can get this decline and a rally up to all-time highs and then some kind of reaction, expect all of these 2008 people, bull trap people, I told you I was right all along people, to turn into the double top crew at the top, calling for something like this. And whilst it's a market, anything can happen. Whilst I'm not saying that this situation is impossible, I'm just saying this is how market psychology works. Unfortunately, that leads me into the third piece of psychological preparedness, because these people that are going to be championing the double top and saying, haha, I told you so here, and haha, double top right here. Those people, once we get this initial reaction, are then, unfortunately for them, going to become buyers of last resort, forced capitulative bulls. Meaning, as we then come back up, assuming we do what I think we're going to do and break the all-time high, of course, once we break the all-time high, how do you remain on the bearish side? When the market's making new all-time highs, there is zero bearish argument left. And so at that point, unfortunately for all of the people that have been bearish and wrong-footed the entire way up, are then going to think they're right for a brief moment in time, only to get to the all-time highs, call the double top, and then only for the market to rally back up and for them to jump in at the top. And again, this is one of the things that makes me think once we get to the new all-time high, we're going to see Congress banned from owning stocks. We're possibly going to see surprise rate cuts. Now, they are not priced in whatsoever, and we could easily remain at paused terminal rate for many, many months going forward. But if we see surprise rate cuts at the top, as all of these bulls have been forced back into the market, or all of these bears, I should say, have now capitulated back into the market, if we get up into these all-time high neighborhoods and everyone and their mum and their dog is all on the bull side of this argument, then to me, this will make me very nervous, because I will be a bull in a crowd of bulls rather than a bear in a crowd of bulls. I want to be completely positioned opposite to down here when I was the only bull on the platform amongst a sea of bears. So the same psychology applies to the top as it did at the bottom. If we get up here and everyone is bullish, then I want to be proceeding with caution and looking for exit signals, both technically. So that would be something like a trend line breakdown, okay? We get a trend line breakdown up at here, all-time highs. That for me will be short triggers, long the VIX, and exit the market, particularly if coupled with fundamental things such as surprise rate cuts or Congress banned from owning stocks, just how they banned the Fed from owning stocks back here. So in summary, we are going to see a bunch of psychological warfare play out. We're going to get people calling for the end into this weekly cycle low. Then when we get a bounce, you're going to get people denying and hating on the bounce. When we get to all-time highs, you're going to get those people turn into the double top crew and calling for a double top followed by a huge plunge. And then finally, once we get through there and everyone's telling you, oh no, it's fine, it's a bull market, all-time highs, that is finally going to be the time to punish and upset everyone else, I believe, and go into this deflationary bust. Now, it doesn't mean once we get into all-time highs, I'm going to be just selling my positions. Like I said, I'm going to wait for technical and fundamental reasons to leave the market. But understanding the doom that's going to be posted over the coming weeks into this cycle low, and the doom that's going to be posted as we rally out of that cycle low and towards the all-time high, will help you to prepare mentally for what's to come, will help you to not get shaken out of your positions, and should ensure that you can stay in the market until you have a technical reason to leave. So as the stock market sells off, we are naturally seeing a flight to safety, and the short-term safety is, of course, the US dollar. The US dollar looking to break out here, and I think this is likely just a result of people selling stocks for dollars. Given where the cycle is for the stock market, I wouldn't be surprised to see this run higher for a few weeks whilst the stock market finds that cycle low. And as it does, and the stock market rallies higher, I would expect to see the dollar finally roll over and make its way down to that mid-90s target that I've been targeting since all the way back here. You can see the S&P 500, it's been a good trade. We've made multiple trades all the way up. As it stands, we've choked the stop up. All the while we're above the blue support line, then there's still no technical reason to leave. This cycle low that I've got denoted up here, I think is possibly going to form much lower down, perhaps even as low down as this upward sloping red support line. But again, all the while we're above that, we're still maintaining bullish structure. So a 10%, up to 10% correction could be seen here. But again, once we get down into that cycle low, sentiment will have been well and truly flushed out, well and truly reset. And therefore, we should be in a good situation and set up to rally out of this cycle low for at least a multi-week period, as I've said over and over again. The NASDAQ, I've stopped out of this position. I choked the stop up, as you can see. So that's fine. We'll get rid of this. And we continue to play patient now, sitting on the sides. Some kind of correction, whether it's the yellow line or the red line, is likely what's coming next over the next few weeks. And then, like I said, out of there, I think we got a good chance at attacking the all-time highs. And the Dow Jones, I've just decided to cut this position. So I'm walking away with a profit. There's no point letting it get stopped out. I'll lock in the profit I had, sit on the side, and there will be an opportunity to add back if I'm wrong about this. If this turns out to be a tree shake, we'll be able to get back in somewhere. If not, then we'll be looking to buy a retest of this support or a cycle low and a swing. So sitting on the sides, patiently waiting for this. Good profit locked in. Remember, we caught all of this massive move of the NASDAQ. We re-entered here. I think we got out about here, and then we re-entered here, and we've walked away for a tiny little bit of profit on that second trade. But we've done really well at capturing this bulk of this move. We did really well capturing the bulk of this move right here, live on the channel as well. And the S&P, we've ridden multiple cycles up over and over again. So for me, it's about, I've had a good year. Why spoil it? Why get aggressive? Why start to play cute? Why start to try to find shorts when we're just in a correction? Let's just sit on the sides, preserve capital, and see what the market can give. Hopefully some nice setups will turn up in the next couple of weeks. My main focus here is have a look at Apple, right? Apple right into this yellow line of support. We've lost the upward sloping blue support, and now we are right into this yellow line here. Earnings to be released today after the bell, I believe. So we'll see what can happen there. But I think it's time to start to choke stops up. I think I'm certainly not going to tolerate any daily closes below around this level here. So I'm going to be keeping a keen eye on this. If it can hold support on a daily closing basis, then I'll continue to push this trade into earnings and hold for tomorrow to see what tomorrow brings. But the interesting thing about cycles is if the cycle has space ahead of it, right? If it's early in a cycle and earnings come out and they're good, then the stock price will probably do well, and the market will attribute that to positive earnings. They'll say, oh, well, Apple's earnings were good, so Apple's share price continued higher. But the funny thing about cycles is when we are late in the cycle like we are now, even if the earnings are good, we're probably still going to see a decline because that's what the cycles are telling us. The cycles are telling us we're late. So it goes to show that the charts are the king, the price is king, and all of these fundamentals are somewhat superfluous. So my focus today for Apple wants to be on making sure I walk away with as much profit as physically possible. I want to still give this stock some space to run, but if we can close a daily candle below this upward sloping yellow support line, then I think the best and most prudent action would be to sit on the sides, expect a decline into that cycle low, and then I think we can go again. Gold is due to make a swing low any day now. Now, is it going to continue to be pressured because the dollar is bid? Quite possibly. But I think the daily cycle is telling us to expect a reversal soon, and when we get that reversal, I will be looking to add a long for gold. So if we can get a breakout of this downward sloping green resistance line, as I've been saying, we will add a long there. If not, we will look to buy a swing. Of course, I will update you as always. Lastly, Bitcoin. Bitcoin kind of behaving exactly as you'd expect it to behave at this point. We've certainly lost this bull flag. that daily cycle low is in focus for the middle of August, which lines up quite nicely with the mid to late August expectations for the stock market. So how low it goes is anybody's guess, but I do think we are going to get this decline into this daily cycle low and a reversal, and it's out of that swing reversal that I'll be looking to get long with a stop just below wherever the low forms for Bitcoin. So overall, I think patience is king here. It's only going to be a couple of weeks, 2 to 4 weeks, and we should be able to get some nice reversals, some nice cycle lows show up. And then I really do think it's going to be a violent and rapid rally to all-time highs across the board. I'm going to be posting plenty of member-only setups, and all the setups that I routinely post on this channel for free are also going to be covered as well. Like I said, coming out of those weekly cycle lows, we should have a minimum of 4 to 6 weeks to profit, which makes this a super high quality setup situation to be in. But first, we got to get through that. First, we got to try to avoid all the doom posting on Twitter, all of the people saying, haha, I told you so, bear market rally. We've got to learn to ignore all of that. Focus on the weekly cycles, focus on the technicals, and then of course prepare as we rally up towards all-time highs for those doom posters to become the double top crew. As ever, it's best to take things one day at a time, but I think with high confidence now, we can say we have got a top in. We should be expecting a multi-week decline. That multi-week decline should probably be contained to 5 to 10%. And then I think, like I keep saying over and over again, we've got a very, very, very good opportunity ahead of us, especially for those of us that are able to sit on the sides, play patient, preserve capital, and wait for the highest quality setups that the market is going to give us. So that's it from me. I hope you enjoyed it. In the meantime, take care from me. All the best. Cheers. Bye.